Hi everyone, hope you're all doing well. Today there was actually some news out there in the stock market. It has been a bit of a quiet couple of days once again. Same happened last week. It was a really quiet week. We got to like Wednesday or Thursday and then there was about 1 million trading updates. This week again, pretty quiet week, and then we finally got a couple of news stories that came out today, but it kind of definitely feels like we're on that kind of slope down now until Christmas period where things are starting to slow down out there. But there was a couple of news stories. I've got like 4 or 5 news stories for you guys, some little quick stock updates. I know some of you guys like it where I talk about a lot of stocks in one video for like 2 or 3 minutes and stocks that I don't normally talk about as well, so we'll get onto all those for you today. Starting with this one, gambling.com. So this is actually a relatively new stock into my portfolio. I only started buying this I think last month. Started buying it. I hoped that it was going to go lower. I was able to accumulate more shares and build a big position out for it. Unfortunately at the moment I've only got one buy in it. I think I told you guys on the stocks I'm buying series, I sold a bit of my DraftKings position off to buy this stock. I didn't want to get too exposed in this space, and I didn't want to burn the cash pile too much. I want to keep a decent cash pile out there in case something happens in the market. So for risk purposes, I sold a bit of DraftKings off. I then put it onto gambling.com, and since I bought the stock, the earnings were really good. I don't know if I can zoom out to actually when I started buying it. Yeah, you can see here. So it was only $10, and then it's gone up now up to $15. I'm up a good amount on this position now. So yeah, it's had a bit of a shoot up. I'm not really sure what to do with the position now, if I carry on holding or if I just take the short-term profit on it at the moment. It's one of those. I mean, it's been a great year for me at the moment in the stock market, but I'm unfortunately at the point now where everything I'm seem to be buying just keeps shooting up, and I'm like, I can't really build any like decent positions out at the moment. And reminds me of 2021. That happened in 2021 where everything just kind of started rallying up when you tried to buy anything. And so yeah, I don't know what to do really with that one. But what happened is the market really liked this acquisition they made, and they acquired a OddsJam, a fast-growing technology platform for real-time odds data, which is obviously what they kind of focus in already. So yeah, they bought this one for a 80 million price with the potential of a 80 million more depending on performance through 2026, which is a good idea. Obviously splits the payments up as well. And if you look here, the company already does 26 million of revenue, so 3 point something times sales, which is fine. Not a bad price at all. EBITDA of 12 million. So actually, when you look at that point of view, yeah, a pretty good price overall. If you're getting something like 7-8 times EBITDA, and they said here that they are expected to grow EBITDA growth of 20% as well in 2025. So I think if they're doing that amount of EBITDA, they're probably profitable and they're growing very fast as well. This seems like a very good price that they've paid for this as well. So obviously this is going to throw some profit onto the bottom line already in 2025. Obviously it's going to throw another 26 million onto the bottom line of revenue. So the current estimates at the moment of nearly 11% growth next year, and that's with the revenue going up a decent amount. Obviously that's going to go even higher next year. So yeah, all these are going to have to get updated as well. So yeah, it looks like, you know, this is what gambling.com is, that when there's like any kind of upcoming business in this space, they normally go out and acquire them, and that's how they've got a weaker moat-ish, but because they're so actively buying up any sort of competitors, classic what kind of Adobe did really. You know, Adobe they used to do something very similar as they started off, and by the way, Adobe's actually on the video later on. But yeah, I mean, it's up now since I've started recording. Stock's up 16% now, so yeah, really good rally there. So well done to any of you guys that bought gambling.com. Going to a stock that I used to own, Lovesac. So I used to own Lovesac. I sold this one off for around about a 25% return. I started selling this off when I saw interest rates and inflation going up. I saw inflation going up. I thought, oh, interest rates are going to go higher. Interest rates go higher, people are going to be less able to afford someone like Lovesac and their sofas. And also houses will stop being bought, and that will slow down the sales. And I decided to sell my stock, and I made a nice, I think it was 25% return for about a yearish hold, which wasn't too bad at all. I think I was doing like a video the other day, and I was talking about some of the returns that I made, and I even forgot about this one. You know, sometimes you always forget about these kind of stocks that you make a bit of money on, because like I said, I don't really class it as anything too serious. 25% is not a serious return for me. Even though it's obviously great for a year's return, I'm more bothered about the big returns. But if it's 25% loss, I think I would hear it mentioned in the comments section every couple of videos. But hey, and yeah, the stock is originally it actually started rolling up a little bit. The stock rallied up a fair amount. I was actually starting to think, oh, have I kind of sold out of this one a little bit too early, because year to date this was actually up 44%, and then boom, it's fallen off a cliff today, and I can see why. Looking at the numbers, the revenue was up 1.3%, nothing amazing for 17 forward times earnings. EPS was negative, so it's actually loss making as well. And if you look at the guidance for full year 2025, or have they taken the numbers off? That's disappointing if they have. I loaded this up and it seems like they've taken the numbers off. Oh yeah, I think they've taken the numbers off, which is frustrating. But they did the net sales guidance and then they did the EPS guidance, and the EPS guidance was like half of what was expected, and the revenue guidance was like 10% lower than what was expected. So it was a pretty poor guidance for them, and that meant the stock did fall off those numbers, and I can see why. It was a pretty big downgrade for the company. So yeah, not something I think I will consider buying at the moment if the numbers are going to be that weak. Adobe was down 12% today. No surprise at all. I even called this out on the Patreon and on the Discord. Every week I post like a week ahead post, like what to expect. And I even put here on earnings, we'll be interested to see if Adobe do the normal drop off earnings. And there we go. I should have done like a short position on it, really. I knew it was going to drop off earnings. It always does. It's like a repetition at the moment. If you ever looked at the history of Adobe when they report earnings, like the last couple of times, every single time they report earnings, it drops. And Adobe's in a bit of a funny cycle at the moment, because what happens is it drops off earnings and people go, oh, I really like Adobe. I'm gonna buy it. It's on a dip. They buy it on a dip, and then it drops again. And the reason why it drops is because everyone looks at the numbers and they go, oh, they look at the numbers and go, 11% growth. I mean, it's good, but do you want to be paying 40 times earnings for that? And then it drops again, and then people go, oh, it's dropped, I'm going to buy it. And then they look at the numbers that come out again and it drops again. It's just in that cycle at the moment. As you can see, look how much it's been bouncing around in between the earnings. The only frustrating thing with Adobe is I actually wouldn't mind owning Adobe, but yeah, for 10% growth, unfortunately, I think you would need to see the stock at like, yeah, I was going to say $400, but I might even go lower than that, like $360. I think $360 would actually be quite interesting. So yeah, it would need a major drop for me to go buy anyway, but very predictable move once again. SThree, a UK stock, that was down 26% today. Massive drop on the open. Don't know if you saw it on the open, but when the stock opened up, it was actually down like 40% on the open, which was mega drop. I actually bought a little bit of a CFD in the short term on this and rode it up a couple of percent and made a little Nando's out of it. Nothing serious, just a little bit of fun money. I thought that's a little bit overdone. Matty mentioned it on the Discord and I thought, let's have a look at it, and I thought that's a good shout, that, and I thought, you know what, I'm going to do the same thing. So I can kind of say the Nando's is from Matty. But yeah, down 26% today, and probably deserved that it had some drop. I think 40% might have been questionable, but 26% I could probably agree with. 6 times earnings, 6% dividend yield, so pretty nice dividend yield. But they're basically a recruitment company. Now, the only thing with recruitment companies that makes me nervous is that if there's any signs of weakness, these guys always get hit first and they can get absolutely punished in recessions, which makes me the nervous thing of like, I'm kind of tempted on the Patreon and on the Discord, we do like a stock request and we take a look at the stock and see if it's a buy and do it in a bit more detail. And I'm very tempted that this is something for the stock request, but and see actually what would be the good value to kind of own it at, because obviously 6 times earnings, a nice dividend to keep you warm. But the only thing, like I said, that makes me nervous is that it's around the recruiting and they can get punished massively, especially if you think there's going to be a weaker environment coming up. But yeah, they basically came out and said like, oh yeah, it was a bit slowed down out there, people a little bit nervous. Yeah, obviously the French economy at the moment has been a little bit spooked, and then obviously the UK economy with the budget coming up has spooked the UK economy, and basically everyone's kind of took a bit of break off recruitment, and they got hurt from it. The only thing that would make me a little bit nervous is that even though the company is pretty decent, profitable, They do actually have a very clean balance sheet as well, no debt on there either, and a very nice cash balance actually, nearly 20% of the market cap in cash. And they've actually took advantage of the drop in the share price today to do a share buyback actually. I think like 20 million as well, or 30 million. It was a good chunk to be fair. On the drop of the current share price, you're talking close to like nearly 10% of the market cap at 30 million. But I did look at the update and the numbers that they did offer for the 2025 outlook. So if you look here, profit before taxation, so before taxation as well, of 25 million. And that includes 7 million of one-off costs to deliver the additional operating efficiencies. I think something like that can help them with quite a few million a year. I think they mentioned it somewhere else up here. I mean, 25 million before tax. I mean, if you look at what the company did this year, the company this year is going to close at something like, well, before the drop, was 47 million. So they're going to drop from 47 million in profit to 25 million before tax. So you had tax on top, 20%? So you're talking 20 million. The profitability is going to halve. So actually, when you do look at that point of view, like, is the share price going to have some drop today? Yeah, I can see why the stock did drop. So it would just kind of be a point of view as where can they kind of rebound? Because if the stock ultimately gets to the point of view where the rebound to like what they previously did, 40, 50 million of profit, then, if they can get back, it looks like not too bad. But the other thing you got to weigh up is if recruitment's going to get worse, then this stock could easily get a lot worse, and that's the issue. Last one I want to mention, AMD. I feel like I just mentioned about the stock request is that on the Patreon and Discord we have like a vote, and the one that gets the most votes, I take a look at and do a bit of a deeper dive on what stock price I would potentially own it at. AMD I think is a prime one for the stock request for me to start having a look at, because year to date down 6%. Last kind of few years, not really much has been going on with AMD really in like the last kind of couple of years, only up slightly. It had a bit of a drag up from the AI situation, and then all of a sudden people realised that AMD was miles behind Nvidia, and that led the stock to fall about 35%. So it's had a pretty tough time at the moment, but it's starting to catch up a little bit now. If you look at the recent earnings, they started growing back at 17%. The EPS started moving up in the right direction. The data centers are starting to come back strong at 122%. Gaming segment is a little bit weak, but that's forecast to get a lot better as well going forward. And you start looking at the next quarter's guidance. They're actually expected the next quarter guidance to go from 0.77 up to 1.09. Which is great drag up in profitability. So even though you'd look at the moment and you go it's 115 times earnings, when you start looking at a forward PE, that's actually 26 forward times earnings. And if you actually start looking at the revenue growth, 22%, we're going to go from, if we go from 17% year over year growth up to 22%, and the next year as well is actually expected to still continue up to 26% revenue growth. I'm looking at this and I'm thinking, this year you expect to go from 265 up to 332, and then from 332 up to 511. And if they're growing at 26% revenue growth, all of a sudden you're looking at that and you're thinking, actually, that's not bad valuation. If you're getting a company that's 26 forward PE that's growing about 25% a year, that's actually pretty good value. You'd probably be looking at something like this normally trading like 60-ish times earnings, which is obviously like half of what it normally is right now. So AMD is looking like a stock that could potentially be a complete rebound stock next year that is looking a little bit interesting to me, and that's one that I have to take a little bit of a look at some point. So yeah, I thought I'd mention that one to you as something that a stock that I'm potentially eyeing up as that could be a one to watch anyway. So yeah, a little bit of stock updates for you guys, and try to cover some stocks that I don't normally cover on the YouTube channel as well for you guys as well. So hope you enjoyed it. Thanks for watching. See you on Friday.